The last short that was put in was at 4:49 p.m. Eastern Time. Trump's post came at 4:50 p.m. Eastern Time, and someone made $200 million in profit.
Best trader in the world.
Best trader in the world, and this has happened multiple times now.
Pretty much like every other administration, there's some corruption going on, and they just know how to do it better than the other ones, and they're making a boatload of money.
Hey guys, we're back again with Stock Sharks on October 13th. Here with my partner JR, who's the main dude when it comes to the research and the economics and the stock market. Say what's up, JR.
Hey, how's it going, guys? It's been a pretty crazy week. A lot of good upside, a lot of good research put out. A lot of members happy with this month's how it's going. A lot of that's due to the market, the way it's going, but it's been a good quarter. Q3 was really good.
Well, absolutely. And I started with let's talk about this past weekend. Friday, Trump sent out a tweet, or a True Social, I should say. I don't know what they call it, but let's just call it a tweet. And the market tanked, and the recovery came today, Monday. It came back after he tweeted again on Monday. So, Jared, why don't you explain a little bit about what's happening with China, the rare earths, that tweet, and how the market reacted? Take it from there.
For sure. So there's a lot to unpack there, but it says a lot about the current market that we're in, where a few truths or a few tweets can make the market move that much. Although it is the president speaking, so it's just a wild time, and there's a lot of pockets of the market that are interesting. And one of the most interesting, I wouldn't say most interesting, but a lot of people are talking about, there's bubbles. The rare earths, those stocks went gangbusters today. Now on Friday there was a tweet put out. Maybe we could put the tweet up. The tweet that the president put out saying that there was going to be more retaliation within the trade war for China, and markets got a little spooked. Now, the media does hype up these things, 872-point drop in the Dow. They make it seem like it's such a big deal, but like when I first started investing with Dow Jones was at like $9,000. And today it's within the 40s, going on to the 50,000 mark. So an 800-point drop isn't that big of a splash in the bucket. It was more so the Russell stocks, or the non-Dow or non-S&P 500 components, which is where a lot of the speculation is happening in the markets. Those stocks saw huge reversals, only for that reversal to be pivoted back on Monday today, when Trump tweeted out Saturday saying, "Oh no, China's fine, everything's all good there." And then they also had the huge progress in the Middle East today. That, I believe, that had some sentiment to do with the market as well, with them saying, no, there's no China problem, and we have peace in the Middle East. A lot more investor confidence comes there. Now there's a lot of people offside from that trade, because there's a lot of selling happening on Friday, because people thought, okay, October is a seasonal down month. He's doing this tariff nonsense again. Let's get out while the getting's good. And then there's a huge reversal today.
Yeah, we're up 600 points. There's been some crazy stuff that a lot of people don't know what actually happened on Friday, because not only that, the crypto market actually plunged, and it plunged pretty bad. Worse than Sam Altman-Fried, worse than Luna. It was one of the worst.
SanDisk.
Sorry, and it was one of the worst days in crypto history. Now, what a lot of people though don't know, this is crazy, and has happened now a few times in the administration's time. But a new crypto wallet was created on Friday that started shorting Bitcoin and Ethereum before Trump's tariff announcement. So check this out. The last short that was put in was at 4:49 p.m. Eastern Time. Trump's post came at 4:50 p.m. Eastern Time, and someone made $200 million in profit.
Best trader in the world.
Best trader in the world. And this has happened multiple times now in the crypto market. Now, like I said, we're seeing the rebound in the crypto markets today. I think Bitcoin went up by 2.5% or something like that. Ethereum had a killer day too. Now it's at about 2.75%, but just the market's kind of been up and down on this thing today. But what do you think? I know everyone has their thing here. Something's going on.
I see it as there's nothing we can really do about it, right? It's going to happen. I mean, I read a article today saying that the president was trying to put his son on the board of TikTok with this TikTok deal.
I heard that's
happening. So, I mean, it's pretty much like every other administration. There's some corruption going on, and They just know how to do it better than the other ones, and they're making a boatload of money. For me, I don't really care about it because it's like, what am I going to do about it? Like I'm trying to look for good trades. I'm trying to beat the market, trying to, do all those things, right? Those things happen all the time. We see it with all types of administrations and corrupt governments. I think a bigger one that needs to be more discussed about it is the Argentina deal,
Yeah, talk
the
about that.
bailout,
He just got bailed
the,
out.
the
That's
bail,
was that $20 billion?
$20 billion, and Argentina has an election coming up
Right.
October 26th, which is seeing its president lose multiple seats in like what would be like their midterms, right? This party is losing power. And there's two sides of the story, right? He's brought inflation down, but their economy hasn't gotten much better, and their currency is pretty brutal. So the what's interesting, you're talking about corruption with that crypto wallet being open, is the Treasury Secretary, Scott Bessent, a good friend of his, is hugely invested in Argentina, and he would have got completely crushed if they didn't have this bailout coming through. So there's a lot of that going on. I think that's actually a bigger story because right after that deal was announced, Argentina announced that they'd be selling soybeans to China, like a massive soybeans deal, and they didn't even do it in return to the US, which is kind of taking a hit right now, especially the agricultural space, right? You just go online and see all the farmers with their disdain on particularly that deal, but it's just not an amplified story. So there's a lot of things going on in markets right now, a lot of things going on in the news, a lot of things going on in the political sphere, and you have midterms just around the corner. And the government's been shut down for 2 weeks now,
Yeah, that's right. How long do you
13
think this
days, 2
government's
weeks
gonna
officially tomorrow.
how long do you think this government is gonna be shut down for? Poly Market's saying, I think 32 days now. I think that's the odds at right now.
32, yeah. I mean, last government shutdown I traded lasted like 38 days, I think it was. And I believe there was a 55-day one too when Obama was in office. I don't know the exact dates. So I mean, governments in the US, they shut down the government all the time. It's always about money and how much they want to raise the debt ceiling so they can continue spending. And that's what's kind of driving markets right now. Markets have really shrugged it off. It's more so, I think the Fed interest rates and the tariffs, the uncertainty from that are what's shaking and moving markets. But I still think it's a full train ahead for the markets. They're not going to let it slow down. They're going to keep that. And this is why the government shut down, is they want more money to spend to add to the economy. It's not like they're shrinking the balance sheet or shrinking the debt. They're only adding to the debt, right? So remember Doge at the beginning of the year? What happened to that, right?
Yeah, it doesn't really matter. I think Elon came out and said something similar where the government can't be fixed, and he put in all that work and put in the hours, and there was really no much return that you're going to continue to spend. And we've seen this happen over and over for years. I think we were having our own discussion about when we first started talking. I think they're talking about raising the debt ceiling. It was, well, how high was it at that point? And we thought it was a big deal.
16 trillion.
Yeah, 16. And now you're pushing $37 trillion in debt. So, JR, back to it. We're going to talk about, these Chinese tariffs, or I should say tariffs in general. What are we looking at? He's still trying to impose the November 1st 100% tariff, as he mentioned. What kind of swing are you thinking is going to occur here in regards to this whole thing?
Well, two things can happen. They could go through or they don't. I'm betting that they won't go through, and markets are mostly betting that it won't go through, and that's what you saw with the rebound today. So, I mean, where to look is pretty much the same things that have been growing all year: AI, robotics, finance. That's kind of what's been driving the Chinese stocks, are the ones I pay attention to. So, yeah, I mean, with the tariffs, there's certain parts that we're going to get hit, and certain parts that will win out, but it's not affecting the overall markets. Markets are largely ignoring that, and that's why you would think the administration put out that tweet on Saturday. Markets react the way that they did today.
Absolutely. In other news today, we wanted to kind of discuss some mergers and acquisitions. I know you really want big into the M&As, which you called earlier this year in regards to more bank M&As. What else are you seeing today in regards to that vector?
Yeah, so I actually think there's some really interesting waves to happen. I got a list of stocks that I've been paying attention to,
Cool.
just to come up with like kind of different thematic acquisitions that could happen. I think there's going to be sort of a wave now that AI is not hitting its growth plateau, but with a lot of the circular deals that we talked about last week, they have to start finding new growth. And I think a lot of that might be driven through acquisition. One stock on my list, I think it's kind of funny to think of it because it's not from any fundamental standpoint. It's actually, do you remember C3 AI?
I do remember. I remember the IPO really, really well. And I remember it popping to about like $1.20, if I recall.
Yeah, that's exactly. Well, $1.40,
But
140 was its listing price.
there was something
And
else going on around that time. I think it was the Twilio trade where, and
no, Palantir. Go to the
no, it
Palantir
was,
IPO.
I think C3.ai was way before that. I think I was,
No, they listed 2021. C3 AI listed.
okay. No, it
Yeah,
was
it was around the same
2020,
time as.
so December 9th, 2020.
Okay, that's 1 month away
I
from
think
2020.
I was watching Twilio and I saw the hype and I was like, "Oh, let me jump to C3." I had money in C3. I do recall that. Uh,
Yeah,
it's
'cause there's that article that came.
it's been getting killed
So
since pretty much shortly after that. Oh, 20
so
bucks
you're
a share now.
Yeah, so here's my thesis with C3 AI. They're not a growing company. They're not really an AI company, but their most valuable thing that they own is their ticker. I think an Anthropic or Perplexity or one of these AI startups that are not listed will do a reverse merger with them for their ticker. I think it's worth the bet at $20 per share
Their
that could
ticker
happen.
AI.
Yeah, their ticker AI is they have at least $10 billion with their ticker value, in my opinion, which is kind of crazy. Kind of crazy to think. But with the way that the markets are going right now, and this is not a fundamental bet on the name, it's a bet like speculation of something that could happen. And that would be my bet is with C3 AI is that not a merger, but a merger, but a reverse takeover by a larger AI company and just taking them out. Especially with the health of their current CEO, he's not doing too well these days. So that's kind of why the company's been slowing down, and they can't really compete in a space where Palantir is trading at 180 and they're at 20. That tells you significantly what the market thinks of them. So I think a reverse takeover would be probably in the works for that. And I think that's a bet.
Yeah, I'm looking at their numbers from July and earnings per share down by 640%, net profit margins down 130%, net income's down by 86%, revenue's down by 20%. What happened to this company?
Just no growth. A lot of their revenue comes from one company, a big, large oil and gas company. I believe it's Shell or BP, one of the two.
Mhm.
And that's really what they did their IPO of the backbone on. And they just weren't able to get any growth. And they got outbeat by other AI competitors, companies with actual AI, right? I mean, like think about being in the AI space we're in and your stock's down that much.
True, true. Interesting. What else
So
are
then,
you seeing in the mergers and acquisition space?
so pull up this stock, SNDK. I wrote about this company 3 months ago on our watch list of names to pay attention to. This
So
is SanDisk.
Corp, SanDisk.
They
Yeah, okay. It's up 15%,
look how much their stock is up this year alone.
up 273%, 274%. All right.
So we put our note about them at around $54. I believe that their potential could get bought out, primarily because there's so much memory space needed for with AI that most likely, if you saw the deal that's in OpenAI, the All In podcast talked about this last week. The deal that OpenAI made in South Korea last week was essentially this: they're buying and seeing out, so that they do a better job of explaining it. But what I wrote about SanDisk was I just compared it to Seagate. So if you look up ticker STX, their stock started to move 3 months earlier than SanDisk. And that's when I was like, oh, this is a competitor and comparable coming out of a recent spin out. This is a name to watch. And then I listened to a few other podcasts and interviews, started to understand the play more. Most likely a larger AI company takes them out as well, even with the run that they've had, just because it's needed with what they do.
All right, you said you were looking at one more, mergers and acquisition?
Yeah, so this one you'll like. We've traded this name and we wrote about this company for the last 6 months, but we just weren't able to time it correctly. But I believe strongly Lyft could be bought out. Whether it's Amazon, if there's Zook's project, and there's many other ones, competitors within that space. I think Lyft is ripe for an acquisition, and I think that stock could continue to run. So I have a research note coming out on all the 3 names we discussed, with actually 4 other ones as well on that list that all fit into that tech and sort of AI sort of space
Yeah,
on ones that could get bought out.
I know Lyft's trying to get in the anonymous space pretty heavily right now. I think they're working with a different company, Tensor, I believe. That they're starting up in different cities right now. Why can't Lyft compete with Uber? What's the besides Uber CEO, but why can't Lyft compete when other companies like Kareem, which is now owned by Uber, and Diddy, which Uber got out of, but why is Lyft having such struggles?
Well, Uber just has a much stronger case. Like it's always there's always 2 competitors once a space consolidates, right? You have Coke, Pepsi, right? You can have all the other ones as well. And when you have a verb for what your company, like a lot of people just say, just Uber it, even if they're using another service, right? They're saying just Uber it, just Uber it. It's a verb. And they have a really an aggressive go-to-market strategy. They're competitive on rates. They're everywhere if you need them. They're reliable. Lyft, I've had 50-50 experience using compared to Uber is really, really reliable. And I can imagine that's elsewhere as well around the world. So their aggressive strategy, the smart acquisitions that they've made, the changing of the CEO and not trying to be something that they're not, which is Lyft has always been playing catch up to Uber.
Right.
So they're still playing catch up. They're never going to catch up. But one place that they are valuable is their assets in terms of their data, their customer base. There's a lot of assets there. It's just what's it worth for the right company at the right price.
That's right. Yeah, it's true. I've used Lyft, I think, once, and it's because I had a coupon and I deleted the app shortly after, right? I never really asked drivers which ones they liked more. I know a lot of people try to use both. You see it on the top of cars. Not sure if they still have that. And you have Uber Eats, you have the logistics, you have the trucking. We did an 11-minute breakdown in Uber stock. Maybe we should do one on Lyft, kind of see the ins and outs of that company as well. So I'll make a note of it, and
I published a lot on our website if people want to go read it. Tons of stuff on Lyft over the past 2 years, mainly for that purpose. I just had problems timing the stock because it's a pretty volatile stock. It's a tough stock to trade because each earnings they'll either pop or they'll drop. There's not much consistency there, and that's where Uber sort of dominates them.
So the companies you said, just to kind of repeat, you mentioned Lyft might be in your back of your mind. Lyft is the potential to be bought out in the future or merged, and then you're saying SanDisk was another one, and C3 AI. Interesting. Three names in there.
Those are just 3 fitting on the AI theme that's driving the market right now. I'm actually in pretty much all 4 stocks that we've recommended to Sharks members this past quarter are all practically buyout plays as well. But they're very different from those. But we could talk about those different, and they have their each their own seat.
Got
But one thing that we could talk about is SPACs if you want.
That's what I wanted to get into next, which seems like, it's starting to make a comeback, a little bit.
Type in this stock, CCCX.
All right, I'm looking at it's a SPAC, obviously. It's up 49% in 5. What are they acquiring? What? Tell me. I feel like
Quantum company.
all right. Who's running?
So that's
I'm
the
gonna talk about it. I've never heard of this. I always see the Capital Court X when a SPAC is happening. So tell us a little bit more about this one.
So, you know me, I'm a big fan of SPACs, especially when it comes to trading them. I like the volatility. There's a lot of bad taste in traders' mouths and investors' mouths after the last SPAC cycle that happened. And that's because a lot of them fell in love with the companies too much without realizing some of these companies may have been way too early to be publicly traded companies. And that's what I love about SPACs. It kind of brings the private markets to the public markets, and you really have to do your due diligence in finding a solid asset. So there's a plethora of new SPACs, but you're not hearing about it, right? Like it's not like remember when this first SPAC wave came, it was all over the media, CNBC. A lot of them are very, very hush tight, and there's a lot of solid deal makers that are happening. These are like the top, not the top bankers, but like some very high class guys doing these things, taking these companies public, and they're only taking companies public that actually have a chance. Do they have a breakthrough technology? Do they have a mergers and acquisition bid? Do they have a potential to be scooped up or merged with another company? Or are they fitting this team so right that they could be a player? Or are they an existing player in the team who's not public yet? And that's sort of what I've been seeing. I've seen some quality names be public, but whereas one SPAC last week, I believe the ticker is NCULR. It's a nuclear stock with a CEO who's 28 years old. So that's when it starts to get a little bubble-licious, and you start to think like, okay, maybe we're getting back to 2021.
Right.
But with a side of a few outliers, there's been some very, very solid listing of SPAC companies. I have a list of them somewhere. I just can't find them. Oh, no, that's a different sorry. But yeah, so there's a ton of new companies coming to market, of tons of proposed acquisitions. We recently bought into a SPAC, and my strategy with SPACs now is if you can time the announcement and trade it, that's a good thing to do, but you most likely want to scalp that. And then if the company makes to the de-SPAC process, I want to be out by that time, and then eventually look to buy back in on the dip if there is one. So there's actually 2 SPACs you can type up that show that exactly this chart. You could type in the ticker PEW, Pew. The name of the company is called Grab a Gun.
Right.
It's essentially trying to be like the Amazon or eBay of online gun sales. And you can see the stock's trading at like what, $3 right now?
Yeah, $4.62. It's been around for
$4. So if you look at the 1-year chart, that stock went up from their SPAC listing of 10 to about 16, 17. A lot of members. Now, this wasn't something that we traded. But there's a lot of people talking to me about this. This is one of the first SPACs to come out this year. And I was telling them, they wrote it from 10 to 16. They told me, they're like, great trade. I'm like, get out before the de-SPAC process. And what happened was exactly that. The investors took it to a pre-listing valuation that made absolutely no sense of $1 billion. When they announced the proposed merger, they said that the company was only worth 150 million max. So people wrote the speculation, didn't pay enough attention, and the stock has completely collapsed and sort of crashed here. Not a stock that we're in or have recommended. It's just my experience of trading SPACs. That's kind of how you want to do it. So what ended up happening now, the next stock you could pull up is KDK.
KDK.
You might have to type in on Google robotics or Kodiak AI. That's
Right. I
the
think
stock.
you mentioned this one, right? Kodiak AI. Right. KDK.
So
Wow.
I think this company has buyout potential. Maybe Uber, maybe Amazon, maybe someone looking
Yeah,
to get into the
tell us
truck.
more about the company, JR. Talk to you.
Yeah.
Bring up these tickers, but tell us about the company.
Yeah. So with Kodiak AI, it's a self-driving semi-truck company and with some very serious customers and very serious clientele with a solid backlog. Now, backlogs can be interpreted any which way, but these companies are some of the top in logistics space. I have a family member who works in logistics, so it kind of helps knowing these companies because they've worked at a few of them, so they're big players. I think Kodiak AI is a prime takeout candidate in 1 to 2 years. I think, like I mentioned, Uber, Amazon, or anyone, Old Dominion, someone looking to get into the anonymous trucking space, it's going to be there. And what happened with them was their SPAC, they listed, stock went up, de-SPAC completely crashed, and then it went all the way to like $6. And I started to see filings coming in, like 13F filings from Soros Fund, ARK Invest, and started to see the tapes, the institutional buying just started to increase dramatically. And got to take a position at $6, and it's at like 960 today, and that was like 5 days ago.
Right.
So I think there's going to be speculation there. It could be a good scalp. It could also be a great long.
Interesting. What else robotic companies? I know this is mostly safe for the members, but which ones can you talk about that, that's not
Well, we could talk about them now because we sold them last week.
okay, got it. Which ones,
So it works out
are you looking
perfectly.
at? I know, there was the one you were telling me that just, it was
Serve Robotics.
Serve Robotics. That's the one.
Another really difficult stock to trade. So with Serve, it's a very volatile stock. When they first, where their stock started to get really amongst investors' names was because NVIDIA was an investor in the company. And the stock went all the way up to 25, and then NVIDIA sold, and then it came down. So we took a position this year at around $11. Serve Robotics is a company that is working on autonomous little delivery robots that essentially would do inner city Uber Eats orders. So let's say you order from Chipotle that's down the street from your office. The robot drives down the street, comes up to your building, drops it off there,
Got it.
which is essentially, we all know that's coming. Like, it may be 5-10 years from now, but it's coming, right? What do you think? Do you think that's something that's viable?
Well, I'm seeing it already. So we have the robots everywhere in Austin right now. We have pretty interesting. You see mostly in downtown. DoorDash is obviously on top of that in regards to trying to make that as autonomous as possible. I know Amazon tried to do the whole clone thing, or sorry, the drone thing. I'm not sure how that actually worked out. Never really heard about it. I think they tried it in North Carolina or South Carolina originally. So the robotics features are coming. I think we'd see it now, especially with AI. Mentioned in the last podcast, that's kind of where you're long on, is the robotics sector. And I see a lot of people are. I think JP Morgan announced this morning that they're putting in some billions of dollars into that, and along with other industries. So it'll be interesting to see how fast this moves in the next year or two.
So yeah, we're served why it's such a tough stock to trade is because it's extremely volatile, right? We bought it at 11. They announced a partnership with DoorDash, and that's when I was like, whoa, okay, I think we got a good trade here. Went from 11 to 16, hitting around 17. I was like, okay, time to sell. And then they did a share offering of 100 million, sank the stock. And then they had another partnership announced, and it rose back up to $18. And I'm like, okay, well, I thought I was smart at selling at 16, but now it's above higher now. So that's one thing that I like. I think it's an inevitable thing, but the problem is with that company is competition can come out of nowhere once they nail the economics, and they could be potentially diluted by so much that their stock is tough, or they don't get bought out and they have to compete on an economic standpoint. So it's a tricky one. I like it a lot. And the other robotics name that we sold out of was Teradyne. Really, really like that stock. I just wish it would come down a bit before establishing a strong position. We bought it at around $100. It went to 149. Take the trade when it's there, right? Like, especially with the way the markets have been trading. It's hasn't fully rebounded yet, so that gives me a sign of hope. But yeah, I like Teradyne a lot as well.
So JR, in regards to, stock sharks, you've been, we've known each other for a long time. We started this business kind of by fluke and have grown into, this community along with the media. It continues to grow, and we're trying to, there's two of us, and that's it. We're not a big company. In regards to the trading and the members, the swing trading that you do, what are some of the things that make us different than other companies, and why should people become a StockTrix member? Like, what's there for people to pay, $99 a month?
Well, it's a good question. We have a very interlocked community. Obviously, everyone would say that about theirs, but our community is like kind of like a neighborhood. Everyone knows most people around there. When they're new, they get a good welcome basis. We do things a bit differently than other services. We pick and choose. We don't trade because the market's open. We don't gamble because we want to, please people for the time being. I've told people I'm not trading this day because I think something doesn't work. But when I pick and choose, or we try to pick and choose for quality, we try to find things that you can't find elsewhere. Because what's the point of signing up for a service when you could go type it into ChatGPT, or you can find another service that's covering the same 7 stocks, right? So we want to stand out and be a little bit different, but also applying same first principles to analysis, evaluation, and essentially relationship building, right? Our main thing is we want to teach people how to do this themselves so that they can thrive and do it, right? And then if they need us still along the way for our service, that's what's best. But the main thing is to always teach people our strategies in evaluating stocks, how we evaluate the tape in terms of what trades to make. And yeah, and then I think a lot of respect. We have a lot of respect in our community. You don't get no childish antics. You get a lot of mature individuals who are looking to everyone has families, everyone has kids in our community, and we're all trying to do better for ourselves, so that's why people stick around.
Also,
Is because we have that
in regards to the community, you do get on calls with the members, correct? Why don't you go a little bit?
all the time.
All right. Why don't you go in a little bit of details? Do you do group call, individual calls? How do you break it out with the different members? And what do you teach them in those calls? a 45-minute call like with JR?
Absolutely. So it varies between member, right? Because we have a broad community of some people who work in finance already, and some people who are just beginning, and then there's some people in the middle, right? So each call will be different, but usually what a 45-minute call would look like is we start off with our 4 steps of evaluating a stock, and we go through all 4 steps. Well, first step take about 15, and then we break through, and then with live examples. So that's usually how a first call will go. And then we'll walk through how to evaluate revenue valuation and the difference between net income and revenue, and seeing if a company is actually profitable. I feel like that's a really big thing that people should know about a company when they're first getting invested, is how much cash do they have left? Because I've been blindsided by that in my beginnings of investing. And then we go from there, from just the skeleton of what I like to call the skeleton of the company, right? That's what I like to call a balance sheet. You just break through each part, explaining it all. The second part is looking at the institutional part of investing, knowing all the players in the game, right? It's not just when you're on the Robinhood app or the Quest Trade app, you're not just trading with other people on the app. There's a whole connected system, from the New York Stock Exchange, from the market makers, to the clearing houses, to the mutual fund dealers, to the market. They're just, it's long. So we go through all of that.
Awesome.
Briefly though, because we'd like to do second and third calls to touch on more. And we encourage our members to go out and seek this information, so that when they're doing analysis, they can provide something to the group chat, right?
Right.
So then the third part is we start to, I explain 13Fs, how to read 13Fs, right? Because that's always a cool thing people want to know, right? Like you could read a CNBC article, Berkshire Hathaway purchased X amount of United Healthcare, but it's a difference to see it 3 days earlier on a 13F and how much they actually bought it for. And then the fourth step is tape reading. So, and we just go through like a little lesson on what to evaluate, the difference between volumes, the difference between floats, right? Is because the stock market float is ultimately going to determine how much shares are available, what's a big volume day for X company, how to trade it and potentially get better from that. So those type of things.
Awesome.
That's usually what a first call looks like. Very nerdy stuff.
That's awesome. And so I know, at one point we were teaching like really from the basics of it all, and we got out of that. So who is Stock Sharks not for, is the real question.
Stock Sharks is not for people trying to gamble every day on the market. Options traders don't come. So I know there's a lot of you out there, but it's not going to work, because there's a lot of people who do trade options who try to piggyback off our trades, and they'll be like, okay, you bought X stock at this day. When do you expect to sell it? I'm like, I can't give you an exact date. And I know what they're asking. They're asking for the put price or the call price, the strike price, right? I'm not going to provide that. So if you're looking to do that, no. That's pretty much who it's not for. If it's gamblers, right? If you're just looking to scalp the market, and I know there's a lot out there, but it doesn't work that way in the way we view the markets. I'm sure there's a lot of people who made a lot of money doing it that way.
Yeah.
And hats off to you. We've been doing this for 10 years, going on 11. We want to keep doing this for another 10, 11 years, applying these principles. So that's pretty much who it's not for. But anyone looking to learn, be part of a community that has similar values and goals, that's really what we're all about, is doing that.
That's awesome, JR. Honestly, that breakdown is awesome, and we'll definitely clip it up and throw it on our social media. Is there anything you want to talk about today before we actually wrap this up?
I would say is the best thing you could do in this market is not sell early. And it's kind of hypocritical to say that after talking about how much stocks we sold last week, but I have some regrets selling those names, because now I got to come up with new ideas, and those were some of my best ideas. Start of this year, I had great ideas, sold too early. Middle of the year, great ideas, sold too early. And now we're at the third part of the year. I did the exact same thing. And it's if you believe in something, just hang on to it. I mean, like, that's the best thing you could do until this music ends out. That's the best thing I could
So
do.
here's a question for you. Out of all the stocks since the beginning of Stock Sharks time, which one have you traded the most? Like, you've been in and out for years.
Ooh, probably Futu. That's probably be the one I've traded. Like, if you talk about trading in and out of like at least 4 times, 5 times, 6 times a year, probably Futu. Like, that's almost a guarantee alert. Like, that's one that we've nailed so good. Most people would probably think Palantir or Overstock, but I actually working on some of the case study videos that we've presented this year, which are all great. You guys should all check them out. It gives you even more backstory on a lot of the trades that we've done. If you had to actually give a an analytical breakdown, I would say it's probably Futu.
And if you guys don't know Futu, you didn't see that video. Futu is the Robin Hood of China. So, all right, JR, thanks for the call. Get a better camera, and we'll see you guys.
But we'll go get one right now.
Yeah, we'll see you guys next week, and that's pretty. Thanks for listening. We're hoping we get more views. If you guys love our shit, please subscribe to it. Right now we're just on YouTube. We'll get it on Spotify and Apple Music and all that other fun stuff soon once I figure it out. Anyways, guys, hey, take care. Have a great week trading and in the market and in life in general.
Happy Thanksgiving, Canadians.
Yeah, happy Thanksgiving to my Canadian homies.